with that, we'll go ahead and take it away. Allie, I'm gonna go ahead and start sharing my screen. Please tell me if I'm sharing it the wrong way, like I tend to do, it seems every week. And
You'll
we
get
will
it down to the hundred.
someday, right? Okay.
It's like it reminds me of the light switches in your house, and you have like a stream of different light switches, and you'll live there for 10 years and still not know which light switch works which light. That's kind of what I think it's like. So you are in the wrong presenter. You're not in the wrong mode. There we
All
go.
right.
Perfect. Oh wait, we still have side notes.
Yeah, I know. I'm doing
Okay,
it again. I think I just need to start it every time. Okay, there we go. That should be right.
that is perfect. Yes.
Perfect. Okay, I'll let you begin.
All right, so this webinar is entitled AI in Credit, the Game Changer for Loan Officers, Realtors, and Bankers. I know, Rushan, you're on here. You are a life coach, financial coach. This is definitely for you too. So anybody in that space that deals with credit or financial things, this would be a great webinar for you. So the premise of the webinar is to give you some insight on how AI is changing the industry, but also in terms of how it can help you in your business. All right, so we'll introduce ourselves as always. My name is Alicia Alt. I oftentimes go by Allie. It's interchangeable. I've been in the credit and financial industry and real estate industry for the last 20 years. So what I bring to this AI table is creating software for those types of industries to help make your job better and continue to grow your business in the new changes that are happening right now. And now I'll let Ivory introduce herself.
My name is Ivory Becker. My background is in regulatory compliance in the default space, dealing between the banks and the regulators. Started during the fallout back in 2008-9 timeframe, dealing with all of that, and then transitioned in the credit space. So instead of working on this big, massive scale of how consumers are impacted, started working one-on-one directly with consumers, with a really large focus on credit education, not only for consumers, but for professionals as well. Eventually, Alicia and I crossed paths, and that's where we combined our efforts in co-founding Credit Score Pro AI. And before we dive into everything, we thought we'd start by talking about the transition into AI that we're seeing all around us. So it's pretty interesting how it seems like a light switch just flipped, and all of a sudden, everything we see on social media, on TV, is just inundated with talking about AI. So right now we're seeing AI start to be integrated into really every sector. So in retail, they're starting to use predictive analytics for looking at how consumers are buying, looking at what those behaviors are really entailing during the holiday season to help retailers plan inventory and to be more effective and to optimize their sales. In healthcare, they're using it to forecast disease outbreaks. In the financial sector, we're seeing it used to predict credit risk, identify potential fraud, and then really enhance risk management and compliance. And then in marketing, they're using it to analyze consumer behavior, really to help predict what type of marketing is going to incite consumers to buy. Manufacturing is even using it as well, to forecast machine failures, which I just think is pretty crazy. So no longer do you have to be reactive, you can be predictive in your efforts in the manufacturing space. So as I had mentioned, AI is now also being used in credit risk management. So they're using advanced algorithms to really analyze these massive data sets and then make predictions based on those data sets. So we're really transitioning from reaction and starting to go into predictive modeling. It's made decision making more effective. It's also created new methods for assessing creditworthiness. No longer is risk management solely focusing on credit scores. It's able to assess overall consumer behavior in different ways in order to determine whether or not there is a higher risk or a lower risk for a consumer. And again, like I'd mentioned before, used in identifying fraud detection. So AI is really good at identifying patterns that humans often miss. By being able to do that, it's able to identify fraud a lot faster. And then it's even transitioning into the lending space. So we're seeing AI be able to make credit decision or being able to make lending decisions in the snap of a finger. So a borrower can now submit documents. AI can read those documents, interpret those documents, identify if they're authentic, and make decisions in 30 to 60 seconds. So this allows for things like day one certainty, for example. And Allie, I don't know if there's anything you'd like to expand on in this category.
I think the only thing I'd like to expand on is I do know of credit unions right now, and I'm probably not even privy to some of the banks and what they're doing, but I know credit unions that I have relationships with that are currently using AI as their underwriter. So they have a couple underwriters within their office, but their underwriting goes through AI. And then at this point, because they're testing it, they'll let the underwriter look it over. And on so far, their results are that the AI system is approving more loans than an underwriter would, but for good reason. So they're happy with the results so far. So that's really interesting. So it's really being tested so that we maybe in the future have a lot less of the human interaction, even in the underwriting process.
Mhm. And it's probably helping to prevent a lot of human error when it comes to the underwriting reviews as well.
Yeah, and speed of decision
Yeah,
making.
definitely.
But
Definitely.
they are finding it seems to be that the recommendations by AI to approve or deny a loan are better than what the underwriter would have done, which I think is phenomenal.
And today, we're really going to dive into first talking a bit about today's market conditions and some of the difficulties faced in the lending space, then transition into the AI side of the discussion. Really looking at how AI can help with what we're seeing in the market today. So it should be about an hour today. You know, we may go a little bit over if there's a lot of Q&A. We want to, again, make it beneficial for you. So feel free to ask in the chat. You can do that. Of course, here for those of you in the Zoom, those on YouTube or on Facebook, you can ask in there as well. We can see your questions there. And then as always, because this is live, it is recorded, so it can be watched for those that weren't able to make it that did register. Okay, so what is your goal as a loan officer, a realtor, or a banker? Pretty simple question. Ideally, it would be to close more loans and to help consumers buy and sell more homes, right? It's how you make your living. Now, typical market conditions, I want to go over what those look like first, and then we're going to compare that to what we're seeing as far as the transition in the market today. So what stops loan closings from happening in specifically the home buying side of the industry? So we know that about 69,000 people inquire about getting a mortgage on an annual basis, but only 35% of those inquiries actually turn into a closing. And the main reason or the main denial, the main thing stopping people from getting to that closing table is credit and debt to income ratio issues. And this is over half of the denial reasons. And this is a normal market. This is the typical market. And I guess one of the things I should point out too is typically if someone is suffering from credit issues, lower credit scores, they often are going to have a higher debt to income as well. And I think the reason's pretty obvious. If you have a lower credit score, you are typically paying higher interest rates on any of your consumer debt. So let's look at the current market and how it differs from that market that we've seen typically in the past. So mortgage rates have been high. We all know this. Now they have been dropping down a bit. So they're under that 7%, but we all know this can yo-yo. Housing costs are now at the highest level since the year 2000. The first time home buyer average age is now 35 years old. So it's getting we're getting older. Our first-time home buyers are aging before they buy. And the age of the typical renter has also actually increased to 41 years old. We're at the same time seeing rent prices increase. So the average rental across the US, and of course, we know local markets are vary, but the average rent for a one-bedroom apartment is $1,500 across the US. That's a massive change if we even look at the last 10 years and take it back even further, the last 20 years. And homes are 52% more expensive than rentals as in 2023, which has been very discouraging for consumers, and it is the biggest gap on record. So the high costs in the buying market have delayed homeownership for many of these borrowers, and it's kept a lot of consumers who have felt the impacts from inflation as well in the rental market, even though rental costs are also increasing. But with that divide and that gap becoming wider and wider, it's becoming harder for people to transition. So I don't know, Allie, do you have any thoughts on some of those trends that we're seeing in the market, or really anyone in this chat? I always love to hear people's experiences and commentary with some of these statistics.
I mean, I'd like to just chime in, obviously, if we look at homeownership being more expensive, and so we're having more renters out there, it's obvious that rental prices are also going to increase because we have a large flood in the market and we don't have enough rental spaces for everybody wanting rentals, so they can hike up the prices. And, it's interesting, even like with property managers, I know they have a system. Like if you've been in their rental process, in their rental properties for a few years and you're like, you got this great rate, they want to find a way to kick you out and get the new person in. So it's definitely a problem right now where rentals are sometimes becoming unaffordable for people.
Yeah, in the 1980s, the average age of the first-time home buyer was 28. So we've seen a pretty big shift of people becoming older and older before they buy for the first time. First-time home buyers are now making up 32% of buyers in 2023, which is up from the prior year of 26%. So what's interesting is when people are buying, they're staying put. And it's likely because of having those lower rates. So it's likely what we're going to see coming into 2024 is primarily those first-time home buyers being the ones buying. And I guess I'm leading right into it. The people buying right now are oftentimes going to be the ones that were pushed out of the market previously, right? You remember when we had all these bidding wars. And if you weren't that perfect person, and sometimes, you had all the right criteria, but you're still being bid out of a property. And if you're a consumer who has credit issues or higher debt to income, you're going to be set aside because people in the industry, whether they're a loan officer, whether they're a real estate agent, they are so busy just trying to keep up with the volume that they didn't necessarily have the time to put towards really focusing on those that may have the additional trouble that they need. So, oh, and I did miss something in the chat here. What about the pay gap? People's paychecks increasing but not keeping up with the cost of living. Absolutely. And with inflation, everything's more expensive and we're not earning more money. So we're seeing quite a bit more debt to income issues as mentioned by Ali as well too. And that's exactly what we're seeing right now is high debt to income, lower credit scores, consumer debt is increasing. We're seeing higher average balances on credit cards right now, a lot less savings being available and more consumer debt. So we've got that combination of the high rates, high prices, higher debt to income, lower credit, and it's making it more difficult, not only for consumers to buy, but on the professional side for you to qualify these consumers and be able to help them transition into homeownership. So
yeah, and I think a good point to this, and Rashawn, I hope I'm saying your name correctly about, this paycheck gap, right? They're not getting paid more, but things are more expensive. And I think it becomes where it's even more important that we look at the credit aspect of things. So if you have a higher credit score, you get to pay less for the everyday things, right? And I think that's important to note that this is a changing of season where credit becomes super, super important in our world. Where, when I started in the industry 20 years ago, you could have a low credit score and do whatever you wanted. It wasn't that big of a deal to have a good credit score. And today it's become almost, I wouldn't even say almost, it is a necessity to have good credit.
Absolutely, absolutely. And when it's essential to evaluating loan eligibility. I mean, we all know that whether you are a mortgage loan officer, whether you're a banker, I mean, it really doesn't matter. Whatever type of lending product a consumer needs, credit is a driving component of that approval. So knowing how to analyze reports, how to read credit reports, how credit scores work is really pivotal, excuse me, for anyone in the professional space. But at the same time, having that knowledge base also helps you to build trust, right? That consumer wants to look to you as an advisor. And if there's uncertainty, or if you don't have the answers or the resources or the tools that they need, they're going to look elsewhere. So the impact of credit knowledge or lack of knowledge on you and on the consumer is huge. So I'll give you an example of a consumer that has worked with us here at Credit Score Pro. So we had a user at Credit Score Pro that started with scores at 514, 518, and 473. Combination of all sorts of issues. We had defaulted student loans that were being garnished on her federal tax returns. We had collection accounts, a lack of open new credit. So she was really afraid of credit because of the damage of the past, and a charged off credit card as well. So no open credit cards, collections, defaulted student loans, a whole lot of things that were going on. And by the end of her using Credit Score Pro with the help of the AI that we're going to look at later, she was able to get her scores up to the point where she was not only able to qualify to buy a home, but she wasn't looking at that minimum qualification. She had options available to her. So with that being said, to qualify, it was 4 months for her. She did wait 6 months because she wanted her scores to be at this in the 700s. She wanted over 700 for qualifying. But everyone is a little bit different just depending on what's going on. For her, we did also have a little bit longer of a turnaround when it came to her wanting to buy or transitioning to buying, because we had these federal tax issues that had to be taken care of. So it wasn't necessarily the credit report in this case that created a little bit more longevity, but having to deal with tax issues that did it, and having that payment plan in place. So yeah, that was one scenario, and these are the types of scenarios we see with our users every day. But I guess I want you to think about, what are some of the lost opportunities you may have encountered because of lack of credit insight? And Allie, I know you can talk to some of the situations where there's no available options, even with simulator tools, right? The mortgage industry primarily uses a lot of simulator tools when it comes to trying to credit qualify people.
Yeah, and I want to go to Carol's question real fast on Allison's trip and journey towards homeownership and the time frame. And so I know you answered her question, but just in case people aren't seeing what's in the chat, typically we're seeing this 3 to 6 month turnaround is what we typically see. So I just want to kind of give you a typical process for home buyer ownership. So I hope that helps. But what Ivory was hinting at is that, and I'm going to go back as experience as a loan officer. Okay, so I have 20 years of experience as a loan officer. I don't personally do loans anymore, but I do have that license. When I'm doing a loan, back when I was doing loans, if there was a credit issue, I did not have a resource that I trusted and knew they knew what they were doing, right? There's lots of credit repair companies out there, which is great. And some of them serve a great purpose, but there's a lot of them that really don't understand credit as they propose to do. Okay. And so it was really hard for me, especially when I first got started in industry, there was really no credit repair companies that just wasn't a thing. but then, Wayfinder and Credit Expert became a thing, right? And so it was great to have those processes. But when I was learning about credit and learning the algorithm and meeting with the credit bureaus, I was finding that Wayfinder and Credit Expert just were not doing the trick. Like you could get what I call basic information that could possibly help. But I'm going to just share an experience with you because I look at a lot of Wayfinder reports and Credit Expert reports just to kind of compare, like, what are they saying to people? And so when I'm working with loan officers, they'll send them to me and they're like, hey, Allie, what do you think? Just to get my take on it. But I had a situation where a client got a Wayfinder report and she had a student loan. And the Wayfinder report said, hey, you have a student loan. We recommend that you pay $115 on your student loan rather than $215. So just so you guys know, her required monthly payment for her student loans was $215. So had she did what Wayfinder suggested her to do, she would have went 30 days late on her student loan because she would have not paid the actual full payment. And I think this is scary, right? Because a lot of loan officers are relying on that report to be accurate and to help the situation. And in this particular client's case, had she done that, she would have ruined her credit from being able to buy for probably a while because it would have just dropped her score further down than where she currently is. And, quite frankly, getting a 30-day layoff can be hard, right? So we don't want one. We certainly don't want to do something on purpose to create one. And that's unfortunately what happens when you're using systems that may not be robust. I don't know how else to explain that, but we have these simulators and we need to use them as simulators, but they're not giving us the exact information to improve the credit. Okay. Did I answer that question, Ivory? Is that what you wanted me to go over?
Yeah, absolutely.
Okay.
Absolutely. And I think there's another great item brought up in the chat. A friend paid off his car early and thought he had good credit. However, since it was an installment loan, the history, he closed the account. Once the account was closed, that negatively impacted the score, right? Because it could no longer factor into the credit score. So yeah, I mean, having that knowledge base or that understanding of what's going to help and what's going to hurt is pivotal, because if those key decisions are made at the wrong time, all of a sudden that changes that entire transaction, right? You can't reopen that auto loan that's closed. There's no undo button. So.
And Rashawn, since you put that in the chat, we cannot tell you how many people call us and say, hey, I paid off my auto loan. My credit's going to be better, right? We're like, no, that's not what you should do, right? So you already know that. And that is indeed what you said in the chat, Rashawn. Having revolving credit is an absolute necessity. It's the only thing that can stay open forever, right? Assuming the bank doesn't go under, right? So that's how we can build credit long term, is having those credit cards. So we actually recommend 3 open and active credit cards that you keep open and active for the rest of your life. But that's a good takeaway from Rashawn. Thank you for that.
Absolutely. So we've talked about the shift of the type of consumer we're seeing. So I just want to bring that to the forefront again of the conversation, right? That's who we're talking about, is the average consumer right now that's looking to do a transaction is the type of consumer that has some of those issues we talked about, right? Higher debt to income, lower credit, less savings, more consumer debt. And on top of that, 37% of adults have a credit score below 700. So the type of people that we're seeing come to buy right now are in this opportunity zone. And that's really what we want to look at it as, this opportunity zone of that 37%. How many people in the industry do you know that are actively going after that market? Probably
Personally,
not many.
did someone else say something? Did I interrupt?
No, that was you.
That was me. Okay. Personally, as a loan officer in the past, a lot of people really steered away from that because, back when the market was good, you wanted to work with the clients that were ready to go, right? You want to that's what you want to spend your time on. So if someone was not qualified due to credit issues, you got to just push them to the side because you needed to work on the things that were prime for you. And so I've heard loan officers in the past say stuff like, well, if I start trying to grab people that are have those lower credit scores, then that's all I'm going to get. And I'm going to say that that is absolutely not the case anymore. You're going to stand out as a hero for these people. They are the ones that are in the market, but you're also going to be standing out as a hero. And in my own industry, what happens is they tell everybody about you because you solved their problem. And that's where you generate even more leads than what you started with.
Yeah, absolutely. Keep going, Allie. I mean, that's basically what this
Oh,
is
okay.
all about.
That's your slide. Okay. Yeah. So having credit solutions is, to me, it's like the best way to bring in leads right now is being able to market a credit solution that could help those people who have lower credit scores. Even, we know we can if you're in the industry of lending, right? We know for the most part, you have a 640 credit score. We're going to rock and roll. We're going to make a loan. But we're also, those people are what I call you're in the door. But that doesn't mean you're getting the best interest rates. So another part that I think is pivotal is as a loan officer would be, hey, let's help you get your score as high as possible. The higher your score is, the better interest rates you're going to get. Right. So even if you have, I have one loan officer who sends everybody she has in her portfolio over to Credit Score Pro if their score falls below a 760, which sounds weird because you're like, hey, 640, we can give a loan. But she has a promise to her consumers that she's going to help them get the best rates possible. And to do that, they need to be a 760 or higher. And we all know that, right? That's the new thing, 760 or higher to get the best rates. So it's a great way to bring in leads, and then to nurture that relationship with them while they're working on their credit. And then you're gonna get all their people, everybody they know, good credit, bad credit, doesn't matter, but you're going to continuously be filling up that pipeline for yourself.
Right. And it's a long-term pipeline. We don't have to think short-sighted anymore. Before it was just like, can I breathe? I need to just get through what I have to get through right now, and I can't really plan for the future. It's different now. There is time to breathe. You can plan for the future. And I mean, you can have 6 months set up of people that are ready to go every single month, month after month after month, because they are on their journey of getting to the point where they qualify. And if you are a loan officer and not a real estate agent, it can be two transactions, right? The initial qualification and then a refinance later as the scores are as high as they want to see them. Or they can be done the way Allie had mentioned as well. You have options. It's kind of up to you.
And just one more second. I know
Please.
I talk too much.
I do too.
You're gonna yell at me, but I love telling stories because I think it really helps to hone in the whole reason that we're here today. But I had a loan officer not too long ago call me, and he was crying, like literally crying, because he said had he not been working with me and building up that pipeline of those people who weren't credit ready before, that he used to always throw to the side and not work on, he said he would have went out of business because of the market. So I think it's important that, yeah, this is real stuff today. This is the new way.
Absolutely. Absolutely. And now let's talk about the problem though. Okay. We all understand at this point, especially, understanding credit's important. Helping people qualify and resolve their credit issues is important. But there is a huge lack of training for any professional in credit. It doesn't matter if you go to the biggest bank. It doesn't matter if you go to a boutique lending space. I mean, really, there is just no training on credit. And it's the same for consumers too, right? It's not in our education system, whether we're talking about primary, secondary education. There is just a big financial literacy crisis within our country. And because there's this lack of training and this lack of education, you're left in a position to where you have a client looking to you as that expert to give them the advice, but you don't always have the answers. And that's a very uncomfortable position to be in. So understanding credit scores helps you to be that reliable advisor. And I want to highlight the word advisor because that's what your client is looking to you as. You are more than just that person that helps them with a transaction. They are relying on you for, we hear this, one of the biggest financial decisions. It's beyond just that single financial decision. Those that are homeowners have 45 times more generational wealth. That's a crazy statistic. So you're really setting the trajectory for what they can do, not only for themselves, but their families, and the generations after them. So understanding credit, important. Now, the interpretation of these factors you see on the screen becomes complex, especially when we add an additional complexity of the fact that there's multiple different types of credit scores. We've got Vantage score and FICO score. And then within those types of scores, there's multiple models. There's different versions of those scores. So having that complexity built into it makes it even more uncomfortable if you don't feel like you're the expert. But I have good news. AI can help with that. That's why we're here. That's the whole point of today's discussion. So what can AI do to help? So I've got several things showing here on the screen. So AI can help dispel the incorrect common knowledge. How many times have you heard conflicting information about credit? Probably a lot. And on top of that, our clients are also seeing that conflicting information on social media, just browsing the internet, really everywhere they go. And it creates this analysis paralysis type situation for them where they just feel stuck and they just don't take action. But by being able to utilize AI, you can get them out of that zone. It also helps take the guesswork out of understanding credit, right? You now no longer have to understand the deep complexity of the algorithm that looks simple on the surface, but it just keeps getting more complex the more you peel the onion back. And it removes the requirement for the professional and that consumer to be the expert, right? I kind of already had mentioned that. It also can help the consumer not have to rely on hiring a professional to help them fix their own credit if they have credit issues, because we all know it can be difficult to find an affordable professional, but even more so a trustworthy professional. Ali and I are not shy in knowing that the industry does unfortunately have a lot of scams or a lot of individuals within it that aren't as much of an expert as they should be if they're in the business of helping consumers with credit. And then, of course, time saving. We already talked about AI and how quick AI can do things in the very beginning of our discussion today. So I don't want to labor on that too much. But it also increases the accuracy of the information provided to consumers. It creates more personalization. There's no more cookie cutter here. This is what we give to the other 100 people that have asked us about credit, right? Or thousands of people. And with that personalization comes the AI machine learning capabilities. So with AI and that machine learning aspect, those systems are able to continually refine over time, make adjustments, and become better and better and better. Ali, feel free to jump on in. I know I was long-winded there. You're on mute.
Sorry. I don't usually go on mute, so I'm sorry to that. Yeah, I would say you covered everything that I would have said, so perfectly.
Okay, so let's talk about what Credit Score Pro is then. We've obviously mentioned it. You see the logos on the slides and behind us here. So Credit Score Pro is an AI tool that is meant to handle every aspect of credit management. So we noticed a big issue within the credit space. Well, there's several, but one of the main issues is there is no system or tool that exists to handle every aspect of credit, whether that is dealing with negative information, whether that's understanding how credit works, whether that's education. So what we've been able to put together is a system that does AI analysis. So it automatically reads the credit report, snap of a finger. It's looking at that raw data file that none of us see on the front end. Ali, can you share a little bit about what a raw data file is for everyone?
Yeah, I absolutely. And I think this is super important. So when we are looking at a credit report, so, and I'll speak kind of directly more so to the loan officers, you're going to see a credit report from your vendor, right? Whatever vendor that might be. That information that you see on the credit report is what that vendor decided to show you. Okay. because on the back end, the vendor actually got this document that was probably, let's say if you have a 10-page, I say this on all my webinars, but if you have a 10-page credit report, that raw data credit report could literally be 500 pages long. It's a lot of code. It has a lot of information in it. So if we're relying on, let's say, a human, a credit professional to help with credit issues, and they're looking at that vendor credit report, no matter which one it is, there's millions of them, right? Know that they're limited on what they actually can see to help that consumer, because that's all they see. Now they can go try to get a raw data credit report, have good luck in doing that. But even if they did get that raw data credit report, you're not going to be able to find a professional at any reasonable cost who's going to read a 500-page document to give credit analysis that is very efficient and complex to the consumer, right? Or to help them in that complexity. So this is where AI is really amazing and why people are really going to AI, right? AI literally reads that raw data credit report, the one that we have in Credit Score Pro. It reads that to find all the errors, all the mistakes, all the ways to help the consumer, something that you couldn't pay me to do, right? And if you did pay me, I can only manage a couple clients a month, right? Because it's too much work. The AI allows this process to happen very fast. It reads that, it analyzes it, and then can provide some really detailed information and help to get like negative things off the credit report, for instance.
And beyond that, Allie, would you mind going into, outside of looking at errors, outside of looking at negative information, how the AI is also looking at the existing opportunities for score improvement?
Yeah, I mean, that's really important. So Credit Score Pro has the ability to read and analyze the credit report, again, to discover errors and stuff, but what Ivory was talking about, to see opportunities. So similar to what you get when you get like Wayfinder or Credit Expert, but real analytics, like real
On
information.
steroids.
Yeah, so like I like to say on steroids, but it's true information based on the FICO algorithm for, if their goal is to buy a house, they can select buy a house, and it's going to say, okay, based on this algorithm in your credit report, your personal information, these are the steps you need to take to be able to improve your credit score and be ready to buy a home. So it's very specific in nature because it's able to, again, read that information, analyze it based on the person's goal, and then spit out results. And even like a lot of credit repair companies, if you think about credit repair companies, they don't even offer that. They're like, let's do disputes all day long. And I think if any of you, you're in the industry, you understand that disputes aren't the key to getting a home, right? There's so much more involved in that. Disputes could be a very valuable process, and certainly Credit Score Pro does that, using AI to do it in a way that it's more likely to get the negative item off because it's finding errors and it's learning, right? But it's beyond that, right? And that's really important for all of us to know. So I've had lenders ask me, well, is Credit Score Pro like a fake score increase? And if a person's going to a credit repair company and they're just, oh, we're gonna get all these negative things off the credit report, we would consider that a fake one. So a lot of banks are like, oh, we're gonna steer away from credit repair companies because we're doing loans for people who probably shouldn't have a loan. And I like to emphasize to people that are working banks and stuff, that's not what this is. We're going to work to get negative things off the credit report, but we have, this really robust educational feature inside of Credit Score Pro to teach people how credit works and what they could do to improve it. But then they get this detailed plan. And, the detailed plan, it doesn't stop with, hey, we're just going to buy a house, but do we have a savings account? Or do we have a monthly savings plan? Like, it's going to help position them and be in a better position in all ways, shapes, or forms. So we're doing loans for people who deserve it and need it, and not people who just ran out and got every negative off temporarily and came to get a loan.
Right. So really to summarize, it's looking at how do we deal with the negative? How do we optimize the good accounts that exist and get as much out of those great accounts? And how do we fill in the gap where clients are not, or your clients, excuse me, are not impacting the credit score algorithm? But at the same time, how do we also provide financial literacy and coaching along the way? So they're building not only strong credit habits, but stronger savings habits, stronger financial management habits, and all at the same time, Credit Score Pro, because it is AI, is learning from how the system's been working, learning from other users, and getting better and better over time. So,
Very good.
okay. So I thought this would be fun to share because for those of you who are in the lending space, we often get the question of, well, how is this different from what I'm already using with Credit Expert and Wayfinder simulators? So I'll talk a little bit. Actually, Allie, I think you should talk about this. You're the one with the 20 years experience in lending.
Well, I think Ivory wants me to talk about this because I have a really pet peeve on Credit Expert and Wayfinder, because I do read their reports often, and some of it just doesn't even make sense. So I gave you the example of let's pay $115 rather than the actual $215 payment that's due, right? Or things like, hey, you need to pay this credit card all the way off, things like this, or we need to have a balance on this. It doesn't have the information that's really bad. Well, factual, to be honest with you, on how the credit actually works. So it can be dangerous at times. Certainly, if you've used a Credit Expert or Wayfinder in your industry, you've also seen that it can be helpful. So both come with it, but there's times where I've seen reports that, man, that would have ruined someone's credit, or that recommendation wouldn't even help them. So I think so. Yeah, I have a pet peeve with Credit Expert and Wayfinders. If you want more stories, please give me a call. But Credit Score Pro is way more than that. So, and just on the front part, let's just say the front part. So Credit Expert Wayfinder is giving possibly an analysis that says to the consumer, you should do this to get this credit score, right? Credit Score Pro has that, again, like Ivory said, on steroids, right? Something that's really factual for them to do that is going to result in a credit score improvement rather than on occasion a credit score decrease, like in the scenario I told you earlier.
And I
But
think
we also, oh, go ahead.
let me add this too. One of the main differences with that simulating aspect is Wayfinder can't look at what's not on the credit report for opportunity, right? Where Credit Score Pro is able to say, hey, you are not doing this. This should be added to your profile.
Correct. Yes, that. And, Credit Score Pro, it has the AI dispute function. So if something needs to be disputed, Credit Expert's not going to tell you that. It doesn't have any ability for the consumer to interact with it like Credit Score Pro. Consumers literally interacting inside of Credit Score Pro. They can handle AI disputes. They can look at the educational features like, why do we say this? Why does the report say pay your credit card down to XYZ, right? So they're getting that educational piece. They're not just robots, I'll check off this list. They're really interacting with it. So it's more of a holistic approach to credit repair, right? Or credit improvement or financial improvement. Mm-hmm. Exactly.
Yeah. Yeah. So I think the main thing is Credit Experts really all simulation, but no ability to take those actions. And Credit Score Pro, you do have the ability to take the actions, and it's just a more comprehensive credit solution by identifying or addressing multiple aspects of the credit profile. But again, both are meant to help the consumer get to a goal. We just like the more cumulative approach. So Credit Score Pro is using AI for the comprehensive analysis and personalized credit improvement plan, where Credit Expert's more focused on that simulation and the balance adjustments. Credit Score Pro is going to offer the automated dispute resolution, credit monitoring, and then on top of that, provide a broader range of educational resources, or just any education at all is more broad than Credit Expert. And then while both are meant to be useful for both the individuals and the consumers, the AI approach is an enhancement, and it creates more depth and more breadth to what can be offered, and provide like a full overhaul of credit, right? It's not just a quick fix to get to a short-term solution. It's meant for longevity, and for creating that person who can get to that perfect credit score, but then also maintain it and keep it. So
now I do want to just chime in there. You mentioned it's not a quick fix, which absolutely it's not, but when people are improving their credit, I've seen where a 500 score on a consumer using Credit Score Pro turns into a 730-day period of time, right? Like that can happen, right? But the idea is that they continue to be on that process and continue to have the habits, form the habits, right, to keep that credit score. So it can be a quick fix per se, but that's not the intent.
Yeah, it all depends on that credit profile, right? There's going to be some things that are quick fix ready and some things that aren't. So that's why it's individualized. So, okay. I guess I should say what I'm going into. So what does Credit Score Pro look like? I'm going to give a visual representation so we're not just talking concepts. So the way the process works for a user is they sign up to access their credit report. From here, this is a picture of what their dashboard looks like. There's more to it than that, but I can only fit so much on a slide. So the Credit Score Pro AI is automatically going to analyze that raw data credit file in seconds, like Ali had talked about earlier. So it's taking the hundreds of pages of code, running it through thousands of different algorithms to identify both the errors on the negative accounts and the opportunities for improvement. So really, the system's understanding what those laws and those regulations are when it comes to the compliance of credit reporting, identifying those issues, and then from there, it's able to determine what kind of dispute is needed for that user, but beyond what type of dispute, what dispute is most likely to lead to a correction of the information or a removal of the information on the credit report, whatever makes the most sense. So the system automatically is going to select the negative items. So it's going to put all the negative items. From there, the consumer chooses which negative items they would like to dispute. Ali, I'm going to pause here and let you jump in on why we want the users to make that choice.
I think that, the biggest reason is, it needs to be interactive. People need to make choices for themselves. I think that's super big. But also, there may be an account on here that they don't want to dispute for some reason. Maybe they're, I'm trying to think of a scenario right now. Maybe they're currently dealing with it in another way. But they ultimately get to do that choice. They can also on here dispute like inquiries off their credit report. And there's going to be times when they are not going to want to select all the inquiries because they just got that credit card open. You wouldn't want to dispute an inquiry from a new open account. So it is important that they have the ability to select. Did you want to expand on that, Ivory?
No, we're
Okay.
going to it next.
Okay.
So once they select the accounts that they want to dispute, AI is automatically going to create a dispute reason. And you'll see in the picture on the right, it says suggested next to the dispute reason. The user of Credit Score Pro does have the option to select a dropdown and do their own type of dispute if they want. Again, we want to give consumers the freedom to do what they want. At the same time, we also want to give them the suggestion of what makes the most sense. And then from here, they also have the option to, in the case of fraud, to select fraud or identity theft. AI doesn't know if something's fraud or identity theft. AI doesn't know if an account was opened in someone's name without their approval. So and I talked about this before, it's going to select the best dispute, and it's going to, as the system automatically imports new credit reports, it's going to adjust based on changes in the information on the credit report, based on the experience it's learned from the thousands of other consumers' disputes that it's done, and everything else. Okay, and then the great thing about this as well is we again want to make things as easy as possible for users. So users can choose to print and mail their disputes. They can choose to email their disputes, or they can, at the click of a button, have the system mail their disputes for them. So again, we want to make it very easy for them. And then we talked about that AI action plan as well. We don't only just want to be disputing information, right? That is a part of credit health, a part of credit improvement. But we also want to make sure that consumers are able to improve their credit scores and reach their credit goals. So we have the option where they will choose what their most immediate credit goal is. So if it's to buy a home, they'll choose buy a home. The importance of this is, remember, we have different types of credit scores. There's a version of the FICO score that's used in mortgage lending. There's a different version used in credit cards, different version used in auto lending, and so on. So based on that goal, the credit action plan is going to be tailored towards that version of the credit score because each model functions differently. And interprets information on your credit report differently. So it's extremely important that we consider that when a user is using Credit Score Pro. Now, if a user chooses not to select a choice, we're going to choose what's the best possible way to have the highest score based on the algorithms that are used in general in lending. So obviously, again, consumer choice is important. We'd like them to pick their goal, but we're not going to ignore them and not give them any sort of action plan if they don't select a goal. Anything you want to add there?
Nope, I was just going to add what you ended with.
Okay. So this is what the action plan looks like. And I know it's very tiny on this screen, so you probably can't read too much of it. But in this case, what we're showing is an action plan for someone who has an 832, 795, and 825. There is still opportunity that the AI can find for improvement with high scores like this. This AI is not meant to only focus on people that have credit damage or people that just need to do disputes. It's really meant for how do I maintain credit health? How do I keep my scores as high as possible? And then every time that Credit Score Pro imports the new credit report, because once they're available, they're automatically imported into the system. It's going to update their credit action plan accordingly. So if they've already completed a few steps, then it's going to update with the next steps that they need to do. And often there's changes, right? Maybe now we've identified that that user has a credit card they haven't used in 3 months or 4 months, and so it's not factoring into their score anymore. They're going to be recommended, hey, make a small charge on this credit card of X amount, and then you're going to see that impact your credit score positively, and here's how. And that's really what this is meant to outline, to make sure that the user understands these are how all of my different behaviors are interacting with my credit report and then creating my credit score. So it's really training the user over time on how to keep and maintain a strong credit score. And then at the same time, it will recommend credit building tools for those individuals who are credit invisible or haven't been impacting every aspect of the credit score. Remember, we mentioned that we want to identify opportunities where they're not impacting the algorithm where they could see score boosts. So we don't ever want to be telling people, we'd like you to go take out 20 grand in new debt. If there are tools or resources that exist to allow a consumer to add positive information on their report, like their rental payment history, utility bill, subscription services, those are better options for showing creditworthiness than necessarily taking out a $20,000 loan they don't need, right? We don't need to create debt where it doesn't need to be. And then lastly, we take this credit action plan that gives the users the resources and the tools and tells them this is what you need to be doing. And we want to give them not just a short why, right? Our action plan is going to give them a why, but an in-depth why, a deeper understanding and financial literacy. And that's really where the credit coaching comes into play. So within Credit Score Pro's credit coaching section, we have 44 different modules that are discussing every single aspect that makes up credit, right? From why credit matters to understanding their rights as consumers, to understanding why are there different credit scores? How are these different scores used in different types of lending? And what are the factors that make up my credit score? And why are they looked at differently when I get a house versus when I get a car? And then we also go even deeper to how do you read a credit report and interpret that information? We know the system's going to do it for them, but it's good to understand, right? It's good to have the why. And then we also want to dispel those myths that exist. There's so much misinformation on the internet, so let's give a solid resource that helps to maintain and improve the credit, but also helps to dispel the misinformation that's out there. And then from there, we want to make sure we help them understand the different types of credit profiles. What is credit invisible? What is a thin credit score? What is a robust credit score? And what do those types of people look like when it comes to making that number that you see when you pull your credit report? And then finally, we go into establishing and reestablishing credit. So for those who have no credit score, what does establishing credit look like? And for those who may have had damage, how do you reestablish or recreate positive credit? So that really goes hand in hand with every aspect that AI is coaching them through along the way. So the consumer doesn't have to be the
Can
expert.
I
Yeah,
chime in?
yeah,
Funny truth is that we have credit repair companies that go through our credit score pros so they can learn how to be credit repair companies because
yes,
of those training modules. But we also have like loan officers go through it, real estate
yeah.
agents go through it because they also want to know so that they can be that trusted advisor. So we have a lot of them sign up. They don't have credit issues or whatever. They just want that education. So that's part of the
Exactly.
benefit of having credit score pro.
Yeah, exactly. Exactly. So it helps you to be that expert, right? Without you having to be truly an expert. You have the resources and the tools, the AI can help you. So it's definitely something where you can use it with your own credit too, like Ali's mentioning. You can take the training, but also see how your behaviors are changing your scores, right? I don't have anything else to add there. I don't know if you do, Ali.
No, I think this is great. Thank you.
And then what is the impact to your business? So if you are in lending or in real estate, in any finance, let's just say in general, what can having this as a resource for yourself or your clients do for you? Um, I hope that it's obvious by now. I hope you're able to answer those questions yourself in your head, but the goal is let's help more people be able to get the financing they need. Credit is opportunity, right? Credit doesn't care about income, doesn't care about demographics, where you come from, who you are. It is leverage to be able to transition and change into that next step that you want to meet, right? Get those financial goals. So ideally, the goal would be helping to increase close rates and then create that long-term growth for you. And then at the same time, we want those challenges that everyone's facing in the market to be opportunity. So flip it on its head, take these barriers and make them doors, right? They are now your pathway to be successful in a difficult market. And then no matter how the market twists and turns, you're fine. And then ideally, we want to build financial success not only for you, but for your clients too. So here's the open Q&A. I know I went long, that's why I was rushing here at the end. But go ahead, ask all your questions. Feel free to put them in the chat, unmute yourselves. If you're on YouTube or Facebook, you can ask them there as well. I can see them in our live. So
And while we're waiting on questions, one question I think might come in. And if not, I bet it's on your mind and you're just maybe shy to ask is, well, how much does credit score pro cost?
you want me to answer?
No, oh yeah, sure. But I think
You pause.
the point is I wanted one of the things that Ivory and I decided to do when we came together to create Credit Score Pro was number one, we wanted to make sure that people had the resources that were true factual resources, not something they found on social media that could be truth or not truth. But we also wanted to make sure that it was going to meet people where they're at. Okay. And so there are a lot of people out there who need credit help and are seeking credit help, but then they find they can't afford it. Or, maybe they're just with the wrong place, all those aspects. We want to make sure that we created the system that met them in terms of that this is the true system that's going to help them, but also affordable. And so I agree. I'll let you take it from there.
Okay, sure. So the AI is actually free. So we wanted to make sure there was no barriers for people being able to have the access that they deserved and have the financial empowerment that they deserved. The only catch to that, if you will, is getting your credit report. So to access the credit report, we are partnered with a monitoring provider, Smart Credit. They provide the credit report for $39.99. and then Credit Score Pro is free. So really anybody can sign up for Credit Score Pro. They can log in, check it out, and then they would just need to pay for their credit report in order to start using all of the AI components and all of those AI tools. And what other questions do we have? Let's see.
While you're looking at that, Ivory, just real quickly,
Mm-hmm.
on the cost, the $39.99. Remember, Ivory was talking about that we're partnered with Smart Credit to get the credit report so we can get the raw data to read it and analyze it and create the outputs that we create with Credit Score Pro. But Smart Credit by themselves is spectacular on the things that they offer inside of their own credit monitoring system. So you're getting not just the robust system of Credit Score Pro, but with that credit monitoring, you get $1 million of insurance protection against identity theft. And that's probably my number one call throughout the week, is that someone's been a victim of identity theft. So we have that. So what else do we have in there? You can do Privacy Master, which scans the web and the dark web to see where your information is being sold. And you can click to take action inside of Smart Credit to get your information removed from those sites. I mean, I could just go on, but it's robust in and of itself. So you combine that with Credit Score Pro, and you're like, you got the financial tool in the palm of your hand, right on your phone, to really improve your life.
So
and one of are coming in.
One of the questions we had, not in the Zoom here, was how are professionals using it right now? Specifically, they asked how are mortgage lenders using it right now, but I'll just generalize it to professionals. I'm asking you, Allie.
Oh, I'm sorry. I was typing a message, so please ask me again.
Okay, question was, how are mortgage loan officers, but I'm going to generalize it to professionals, how are they using it now?
So what I'm finding oftentimes is those lenders or professionals in the industry, because we have a lot of professionals that use Credit Score Pro. I did mention earlier, some of them are using it for their own training, right, to understand credit, which is spectacular that they're taking that leap to do that. And I think more people should do that. They should really understand, because you are seen as a trusted advisor. But where we're seeing it is that when they have clients that have credit issues, or they, I had that one loan officer, I told you guys, if the credit score is below a 760, she sends them to Credit Score Pro, right? So her idea is she wants people to have what we call red carpet credit, right? You walk in the door, you get a yes, right? Which is at 760 or higher. So we see it like a span of different things. They come in, they get denied for a home loan, and so they're sending them to Credit Score Pro to fix that situation. They want to help the client have the best credit possible, or they simply just want to help the client understand credit. Like, so there's so many ways that I see lending professionals using Credit Score Pro. And like what I hear often, I use the word hero. This is what I hear from lenders is I'm looked at as a hero at that point, and now they're referring everyone they know. So it's also used as that lead generation.
And I'll add to it too. We do have like an affiliate option, right? So if you want to sign up as an affiliate, then what will happen is any of your clients that are signing up will send you a report on each month, so you know where they're at. That way you're not blind to what's going on. You know who's using Credit Score Pro, and you can really track the progress there. With that, let's see. I think you kind of answered most of them. I don't want to belabor us too long since we're already 10 minutes after. So I will throw this on the screen. So if you're interested in looking at credit building tools, we do have those open and available on our website, creditscorepro.ai. That's where you can find us. And then if you are also interested, we do have a Facebook group. So along with everything that we've provided, we do want input from the users. We want input from really anybody that wants to talk about credit, not only for making the platform better, but also for these lives that we do every week. Everything we do, we want to tailor to what people need. So feel free to check us out on there. I have it on the screen, Credit Score Pro, the AI credit revolution. other than that, I think we will conclude for today. And as Ali had mentioned, if you didn't join us right at the beginning, we do lives every Thursday. This week is live for professionals. So in 2 weeks, it'll be live for professional again, but every other week we rotate for consumers and for professionals. Pre-register if you'd like on our YouTube page. Otherwise, you can always watch it live without being in the Zoom meeting on Facebook or on YouTube. And I'll let you close out with any remarks you'd like to make.
I'm just gonna make one final remark, and Ivory talked about the Facebook group. We would love to see more professionals in that Facebook private group, because people have questions about loans, they have questions about buying a home, and though we're there to assist and answer those questions, if we can have more professionals in the group to help answer questions, that would be spectacular. But also, you know, we're all there to share and learn, and it's a great space to do that.
All right.
Guys, thank you all for being here today. We greatly appreciate your time. And if you have any other further questions, please reach out to us, and we hope to answer those questions for you.
Bye, everyone.
Bye.